won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now.
Everybody's portfolio that's in that video is in the red right now.
Okay, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. Ladies and gentlemen, in today's video breakdown, if you care about the rising equity curve of your portfolio, please stick around for this YouTube video breakdown. We're going to be covering some XRP technical analysis, but I'm first going to cover some very intuitive tweets that I've released out to you guys. Pay close attention, ladies and gentlemen, okay? The majority of individuals in this market, you need to understand, lose money. 90% of the Twitter influencers and YouTubers that you follow are not profitable traders, ladies and gentlemen. I'm letting you guys know this now, and I'm going to show you in today's video breakdown exactly what I mean by that, okay? So I said to you all, in this tweet thread, you would not desperately need XRP to go to moonboy heights if you just disciplined yourself and learned how to trade. Thousands of trading opportunities for XRP happened this year. Wake up. It is a currency. Its purpose was to be traded, not held. I get the pipe dream, but you are missing out on profits, ladies and gentlemen. So many people put money into cryptocurrencies with hope that it will one day appreciate in value. That is gambling, ladies and gentlemen. That is not taking an educated risk. That is not coming to the market with a strategical and mature approach. That is gambling. If you're putting crypto into this market based off of what somebody said on Twitter or what somebody said on YouTube with the expectation that you're going to see an appreciation in your portfolio, that is gambling, ladies and gentlemen, okay? Instead of doing that, try for once in your life to take a logical approach during a specific session, and profits can and have been made in a bear market. In today's video breakdown, we're going to go into that exactly. While you're waiting for these moon targets, you guys can make money. Now, that is not financial advice. I'm not sitting here telling you that it's easy or that you're just going to go out and plug money into this market and you're going to see a rising equity curve. It takes time. You must sacrifice either mental effort, time, or some type of physical payment in order to be successful in these markets, okay? But at this point, if you are involved in holding crypto as a bet that it will go higher, by all means, do you, okay? I'm not knocking anybody for doing that. Obviously, of course, that is a type of way to invest, okay? But again, determine whether you're an investor or a day trader. What I am trying to say to you is you are sleeping on billions of price fluctuations in the meantime that you could be profiting from. Also, if you just learned how to properly read the markets. Think about this, ladies and gentlemen, if you're still here listening and what I'm saying to you hasn't like hit you to the point where you click off this video, think about every person that you are most likely watching. They tell you to buy and hold. Did it ever come to mind that 95% of traders and investors are broke and fail for a reason? It is because everyone is doing what everyone else is doing. So in today's video breakdown, I'm going to show you how to trade against the general herd mentality, how to do what 90% of people are not doing. Long-term bags are cool for best case scenarios. Obviously, of course, that's the XRP moonshot that everybody hopes and dreams about, right? I have that intuition as well, ladies and gentlemen. Trust and believe I have some XRP long-term bags just in case, right? But do you want to eat well in the meantime? That's the question. People are sleeping on trading XRP as a currency pair against other fiat currencies. And in today's video breakdown, I'm going to show you exactly what I mean by that. So coming over here to this tweet before we jump into the technical analysis, I thought that this was hilarious. This is by Rob Crypto Coins Crew. And it says, when you see XRP pump to 55 cents, but remember you bought at 3 cents. Look at this guy's reaction. I think this is hilarious. He's all excited. Boom, 55 cents. But your boy bought at $3. That is the majority of crypto investors nowadays. Why is that? We're going to get into that today. Coming over here to this tweet again, before we get into the technical analysis, This crypto space has become a big clown show, and the elites will continue to use retail as exit liquidity. Today, we're going to talk about that exit liquidity. We're going to talk about how to identify that and how to use a strategical approach in order to profit from a bear market. Please do yourself the justice and block people who claim they know exact dates on when any of this Ripple bullcrap will end, because no one does, ladies and gentlemen. Everybody claims that they know. Everybody thinks they know, right? They were talking about August. They were talking about September. Now they're talking about October. Now they're talking about November. Ladies and gentlemen, nobody knows. You understand that? So why pay attention to that stuff instead of just staying in your own lane and learning technical analysis properly, so that way you can get the best bang for your buck in a bull or bear market? Okay. Coming over here, last but not least, all right, this is the last tweet I have for you all. Pay attention, because my word specification, my vocabulary specification is extremely important. Successful market timing is a rare skill done consistently only with inside information. Now, I'm not talking about insider trading, because there is legal inside information that you can gather, right? That is, through thousands of hours of backtesting, you can figure out things about the market and the way that the market moves via time specifications and psychological levels based off of liquidity specific designed areas in the market that the market makers react to. And you can live test with logical and strategical approaches, and you can find all of this out yourself. Here at CYPRX, we have students that are living, breathing proof of that, right? Now that I'm done the Twitter spiel, if you guys are still here, smash that thumbs up button. Let's dive into the technical analysis. I have some very interesting tweets to show you guys today from some of these sporadic, improper, impulsive XRP influencers that have thousands of followers. Ladies and gentlemen, if you're following these people, please save your portfolio. I'm going to show you guys how they tweet at tops. Oh man, it's so annoying. I can't with this market. Ladies and gentlemen, please save yourselves. If you are a follower of CYPRX, do yourself a favor. Understand what we are trying and attempting to do here for the market space. That is bring value, that is bring real knowledge, a real perspective from a intraday traders and a long-term hodler's perspective. Doesn't matter if you're a hodler or an intraday trader. You can take what it is that we teach here on the CYPRX YouTube and hopefully allow it to benefit you. Okay. Again, that is your personal choice. This is not financial advice. If you take what we say here and apply it to your trading regime, again, make sure that you're accepting the risk that you're taking on in this market. Okay. Nothing is guaranteed in this crypto space as of right now. Right, ladies and gentlemen? So moving on to the technical analysis, I'm going to show you guys how we were able to catch a sell position here on XRP. Once I jump down to the lower time frame, i.e. the 1 minute entry criteria, we're going to go over the 15-minute chart first. But first, I'm also going to show you guys some XRP tweets that obviously, of course, have put people in the red if they had been following these high-end influencers in the XRP community. When we get down to the trade breakdown, ladies and gentlemen, I'm also going to talk about our target criteria, where our stop losses were, and where we were seeking to take profit from this trade and why we were attempting to do so. With that being said, what I'm expecting for XRP is eventually to flip back bullish, to come and accumulate all the orders above these sellers, above these highs, in the form of trendline traders selling from over-leveraged positions above these highs. That may be in a potential later breakdown coming into this weekend we will talk about, right? So first, let's cover some of these influencers' tweets. The first one is from Brett Hill. I believe this guy has around 12,000 Twitter followers. I'm not too entirely sure if he has a YouTube, but back on the 26th of October at around 2 a.m., he tweeted, XRP is pumping. So most likely this is an individual that lives overseas or is awake during the London time zone. Now, look at where price action is at currently, as of right now speaking and recording. When he tweeted out XRP is pumping, XRP had a little tiny pump. And now, had you have paid attention to price action and what it is that I'm going to go over today, you would have had an opportunity to buy from a lower level from where he tweeted this out to you guys. Again, diminishing all price appreciation from when he tweeted this out to you guys, showing you all that these influencers have no idea what they're talking about. Okay. This pump right here was a liquidity trap. Again, reverting back to the previous tweet, retail traders are exit liquidity for the institutions, ladies and gentlemen. Do you understand that? Okay. Now here's another tweet from a major influencer. I believe this lady has around 25,000 Twitter followers. Okay. She said, XRP is tearing all you bears a new butt. Okay. Look at where she tweeted this at. Literally at the top. And since then, Again, if you had fallen victim to buying because of this influencer's tweet, which the majority of individuals do due to lack of knowledge and information in this market space, your portfolio would be down 3.5% as of right now. Okay, now it's not a lot, granted. Okay, but compared to a person with a rising equity curve or is experiencing profits in this market, you do not want to be the type of individual that buys at top. So let me teach you exactly how at CYPRX we make money in both a bull and a bear market based off of certain market parameters that we follow here in the form of confluences at CYPRX. Okay, ladies and gentlemen, pay close attention. If you do not have a notepad out, if you do not have pen and paper, if you're not taking notes on your phone in the form of voice command, whatever the case may be, I suggest that you do so again, so that way you can go back in the market via TradingView and back test what it is that I'm saying to you guys to eventually take it upon yourself to open a demo account and live test this market. Okay. Information and knowledge in this market is only powerful when implemented properly. Now let's get into the breakdown. So I will jump down to the 3-minute chart, which should solidify where our entry was at for you guys. We entered into the market roughly at the psychological level for 7,475. Again, psychological levels here, trading XRP. We pay attention to the quarter theory psychological level. So if I just round this off to where our entry was at, you guys can see it was right at the psychological level 47475. We're trading XRP up against the United States dollar. So we know that we're going to utilize the quarter theory for our entry criteria. But now I want to show you guys what the markets were doing and how they were utilizing retail as exit liquidity to move the market into their favor to then take buy positions from a discount from where they bought from previously, which is where we targeted for this sell position. Again, benefiting in the form of profits in a bear market, not buying at tops, okay, like these influencers are. You guys get what I'm saying to you all, okay? So with that being said, what we want to first ask ourselves is if we're going to be New York session participant traders. We're going to be retail traders, obviously, of course, because we do not have the amount of capital that these institutionalized bankers and major hedge fund investors have. We are classified as retail investors. That means that we do not move the market with any type of market implementation that we put into this space, okay? We need to be able to identify where liquidity rests and how to react to that because the market makers are going to be doing that. You understand? So before this New York session, if this is the session specifically, I am a New York session trader. I can't correlate that with who you are as an individual. You need to determine that on your own. But my trading window of opportunity usually partakes during New York session. It's when it best fits my schedule. Yours might be different. Okay. So if I'm looking to trade New York session, I want to get a gist of what the market did beforehand to generate what is called a market bias or a market directional bias. I want to build a logical and sound approach to the market as to what could potentially play out in my favor, either a bullish scenario or a bearish scenario based off of past price action information or the most recent and updated price action information, which for us here at CYPRX, we like to analyze the previous 2 sessions. So the previous 2 sessions prior to New York session are going to be the Asia and London session, where we can clearly see the traps in the form of liquidity that the market makers were setting up. And we can also see the runs on liquidity and the market impulsive moves that they were making, creating bearish order flow in the market based off of structure. Okay. So I just want to take your attention again. What we're paying attention to is identifying what the market is going to give us potentially during New York session based off of a higher probability setup, orchestrating what the market makers did the previous sessions. Okay. So here during the Asia session, what can we clearly see? We can clearly see that the previous day, okay, again, remember that Asia session sets the pace for the day, or Asia session creates the wick of the daily candlestick. Well, here you can see retail money above highs in the form of equal highs. Prior to this Asia session, these New York session traders had over leveraged sell positions and buy positions above highs, in which they were looking to get activated into the market if the price of XRP did appreciate above these levels. The market makers activated those orders. They also liquidated any over leveraged sell positions, and then Asia session took sells. Okay. After taking sells, you guys can see here that they finished off their session by liquidating orders above highs again and taking sell positions, passing price action over to London session. Here is that market information right here. You guys can see an area of liquidity, the market makers liquidating that area of liquidity, putting in an institutionalized order. How do we know it's an institutionalized order? Because we know institutions, or let's just say the elites, whoever is in control of this market, are the only people with the amount of money to liquidate positions and move the market enough to break previous market structure. So you guys can see here, we have the market maker showing us the willingness to liquidate highs, move the market structure away from this psychological level, at a high, breaking previous market structure and creating a new swing low in the market, then passing price action over to London session. So now Asia session banking institutions are done. London session banking institutions now have control of the market. So if we were to analyze the same methodologies, paying attention to where areas of liquidity rest in the market, look at what London session did. They literally tell you what they wanted to do. They set up early buyers prior to the London session to build liquidity. Then again, they set up early buyers in the manipulation window right before we break out of the manipulation window, ladies and gentlemen. Again, if you have not been paying attention to what we talk about here on this YouTube channel, this is exactly when the manipulation window ends for London session. And it just so happens to be that's the low in which they set a liquidity trap for London session to make money from. They then push the market up, liquidating highs that were left behind during the manipulation window for London session. They liquidate those levels. And again, we see that same structural institutionalized pattern where they're showing us the willingness to set up liquidity traps above highs. Look at this. Here's a retail trading pattern during specifically the manipulation window in the form of a what? A double top formation or an M formation. You guys can go and read about this. Retail traders will literally sell you a course that teaches you this methodology and charge you thousands of dollars. Look at what the market makers are doing. They're targeting that retail liquidity to come back for a previous retail trap, i.e. exit liquidity in the market. And then they're shifting the market away from psychological levels, breaking previous market structure. So as you guys can see here, we have a liquidity trap, structure, sweep of liquidity, move away from that structure. You guys see here how this is bearish order flow. Liquidity trap in the manipulation window, sweep of liquidity, shift away from that structure. This is bearish order flow, or the market makers making lower lows and lower highs, lower lows and lower highs. So with that being said, coming into this New York session and analyzing all of that price action information, which we would have had with the open of New York session coming into this area to identify, now we can determine, okay, that we have areas of interest where if we do not break above these levels, ladies and gentlemen, we are in bearish order flow where the market makers are doing what? They are sweeping liquidity above highs and they're shifting the market away from highs to then push the market down into lows, potentially where they previously bought from before. So this is going to give us an edge in the market, or at least it did here at CYPRX, because we were able to determine this to then take sell positions, again, profiting in a bear market, ladies and gentlemen, not buying at tops like these freaking influencers are doing time and time again. It's insane that people are paying attention to this stuff, ladies and gentlemen. So now that we have identified the bearish order flow in the market, we have identified what type of market participant we want to be, and that is a seller. Why? Because the market makers are showing us the willingness to liquidate highs and then take sell positions. Now we want to identify areas of interest where we want to be sellers from. Now, with what I've taught you guys on the YouTube channel and not giving away too much information via what I give to the CYPRX students, all we can simply do is identify supply areas, if you want to call them that, quote unquote. Realistically speaking, they are just psychological levels that these market makers are taking sell positions from in the form of premium. We can identify those by highlighting from the candlestick wicks down to the bodies and extending that over. You guys can see that London session piggybacked off of a premium from where Asia session sold from. If you take your Fibonacci tool, which is again a tool that is designed to tell you potentially where institutionalized discounted premium is from the high to the low that broke market structure, you guys can see that London session sold at a 66% premium from where Asia session sold from. Following that same exact trend, you guys can see where London session sold from that led to a market break in structure before they passed price action over to New York. So we can take from those candlestick wicks down to the body and extend that over to potentially be sellers again, i.e. gathering areas of interest where we would like to be sellers from if New York session decides to sell from a premium from where London session sold from. So taking our Fibonacci tool again, how we were able to catch this trade was we took our Fibonacci from the high on where London session sold from, respecting Asia session, down to the low that broke a previous market structure that was so happenly placed during the manipulation window, okay? And we took sell positions from the highs, piggybacking off of where premium sell interest would be at based off of where London session sold from. As you guys can see, the market makers manipulated price back up into highs. We've respected the psychological level 47475 to the T. The market makers sold from a 79% discount. They failed to create a candlestick high or a candlestick body close above a previous market structure high. This indicates that we're making a lower high in the market. You guys can see wick test here, another wick test here, and a failure swing high above a psychological level major, which is the quarter theory, the 7-5 psych level. Again, ladies and gentlemen, this was a beautiful risk to reward ratio. Now, let me get into the logic. Again, building confluences behind this trade. So you guys saw how we were able to identify areas of interest. Now let's talk about the manipulation window. Again, that builds confidence in the form of areas of interest where we're going to be looking to take profit, logic surrounding why a trade can go in our favor. So one of the reasons, again, why the trade developing a higher probability for us for the trade to go in our favor here at CYPRX was number one, what? That we are seeing bearish order flow in the market. Okay, that was confluence number one. Now getting into the fractal nature of confluences and respecting previous premium areas, we can also see that during the manipulation window for New York session, which I've mentioned to you guys time and time again, happens over and over and over again in every single session prior to the session open. Okay, look at the pattern, ladies and gentlemen, that's right down here. You guys see what this is? This is a triple touch of a trend line or a retail triple bottom or supportive methodology region where retail traders, again, exit liquidity in the market, are taking over leveraged buys from, thinking that this is some type of imaginary support in the market. And what does New York session do? It shows us the exact same pattern that the previous Asia and London session made. It shows us a liquidity trap above highs and beneath lows. It pushes the market up. It then liquidates those highs to then push the market structure down, liquidating all the pre-engineered liquidity in the market beneath lows. London session did the same thing, okay? Look at this, pre-engineered highs in the market, pre-engineered lows in the market, liquidating those highs, building liquidity beneath lows for them to profit, and then moving the market away, liquidating any over-leveraged buyers in the manipulation window during London. Ladies and gentlemen, New York session did the same exact thing. You cannot make this up. It happens time and time again in the market, and I cannot stress enough that if you do not do your intuitive research or take it upon yourself to join a mentorship where they teach you this stuff, you will consistently be exit liquidity in the market. You do not want to fall victim to that just because you lack the information and knowledge. Now, with that being said, coming into the New York session, what can we see? Again, they're building liquidity above highs. They're building liquidity beneath lows. They attack the liquidity above highs. You guys can see how they rejected our area of interest, which was the psych level that came in a 79% premium, and the area of interest where the banking institutions during London sold from. They failed to create a swing high, which is a candlestick body push above the previous structure high, and they rejected the psych level with bearish momentum, coming and attacking all the pre-engineered liquidity during the manipulation window prior to the New York session open beneath lows. Okay, now let's talk about our take profit areas. If you guys, again, how we track price action is if we're trading this New York session for target specified areas, you guys can go back and backtrack. Where are New York session traders most likely going to want to be buyers? I know my charts are a little bit crowded right now, so let's clear up some of these drawings real fast for you guys. Okay, so now we're in sell positions. We have areas of interest where we want to be sellers from. We know that we're respecting bearish order flow. We see liquidity traps beneath lows. But Cypress, where are we taking profit from, you might ask? Well, if we know that the previous two sessions were selling, we want to look to the previous session before these two sessions to seek when last New York session were potential buyers. But you guys can see here again, utilizing the advanced tracking methodology, after the liquidity sweep of a low, where's the higher low that led to a market break in structure or shift in momentum? You guys can see right here, here's a pre-engineered low in the market. The market sweeps that low, rejects the psychological level, creates a high, again, a liquidity trap. So here's a high in the market. Here's an M formation, i.e. retail resistance, a liquidity trap. The market generates a higher low, and then the market makers inject liquidity into the market and shift momentum, breaking all previous market structure highs. This is the last significant area where banks and institutions during New York were buyers from. So with that being said, hopefully you guys just paid attention to that. If not, rewatch it. This is the higher low that I talk about identifying all the time on this YouTube channel after the sweep of liquidity. You guys see that. And identifying that, you guys can now see highlighting from the candlestick bodies down to the wick, the same methodology that we use to advance track highs above here. We can do that with lows. And you guys can see how New York session sold off straight into our profit-taking area to the T, where they bought from the previous day, and they injected liquidity into the market. Again, the banking institutions have to win. They do not trade with stop losses. That is how much money they have in this market, okay? They trade with open positions. With that being said, you guys can see how they were selling from where previous banks sold from, okay? And then they sold down into a low where they bought from the previous day, and then they bought price action. As you saw via the tweet, retail traders tweeting at highs, the market depreciating in value, losing money in this market, the market makers clearing out all of that exit liquidity that they generate beneath lows and above highs prior to their sessions, and then they take their positions. Ladies and gentlemen, you as retail traders, again, not financial advice, can capitalize on these market movements if you have the correct market information. Generating back to this tweet right here, successful market timing is a rare skill done consistently only with inside information. There is legal inside information. Through thousands of hours of backtesting and live testing with logical and strategical approaches, you can find this out for yourself, ladies and gentlemen. If you are interested in learning our technical analysis strategy and our approach to these markets, the link is in the description down below. You guys can always reach out to me via our customer support email. We have some brand new CYPRX 3.0 content that is going to solidify a lot of things that is in our 2.0 content for the CYPRX students dropping towards the end of this year. You're not going to want to miss out on that, ladies and gentlemen. Smash that thumbs up button, subscribe to the YouTube channel. And for all of you XRP moon boys out there that are still in the red because you bought back at $3, I'd like to leave you all with this hilarious freaking tweet that I found on the internet. And I'm sure that you guys have seen this. It's already got 171,000 freaking views. This is just hilarious. So for all of you individuals that are in the red right now because you've been buying at tops for the past 2 years, you know, it sucks, but at the end of the day, we can hope to see a better future for the price of XRP. Again, if you're interested in learning how to intraday trade XRP or even just add to your long-term positions properly, that link is in the description down below. Reach out to me. I'd love to have a chat with you. Blessings to you guys. I'll leave you guys with this video. As always, be cognizant, be aware, make sure that you're subscribed to the YouTube channel, and I will see you guys in the next YouTube video breakdown.
I won't stop till I hear him say, oh, oh, la, 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 la.